Hey, Andrew here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 74. And today we're talking about gold. So we're going to have a look at this headline: Gold price slumps after Trump victory. And if we come across to the actual headline, we've got the gold price falls to a 2-month low following US election as Trump trade takes effect. So we're going to stay away a little bit from the politics on this one and talk more about what has actually happened with the gold price and how that might relate to your investing strategy. Because to be honest, the gold price has been doing some contrarian movement in recent months in terms of what it normally does for people's strategies and based on what's happening in the economy. So it's a good time to check in and just see why that is, and have a look at what's going on in the space of the gold price. Now, I won't dwell on this, but if you haven't seen this viral clip, it's quite funny. Check it out. But unfortunately, this guy got probably a little bit too nervous or excited on the US version of the Wheel of Fortune and came up with quite a funny response to solving the problem. And now he is a full-on viral laughing stock, unfortunately for him. So let's get back to the article. 2-month low in the gold price. And let's start, before we dive into what's happened in the last week since the election, but let's talk about what's been happening before the election. And if you've been following along, you'll know that stock markets have been hitting all-time highs. Property prices are still been rising. But surprisingly, the gold price has also been hitting all-time highs. And on reflection, it's probably starting to look like that a little bit of that gold price movement prior to the election was people putting money into gold as a safe haven, which is what it is. It's a safe haven. People move money into gold when other markets aren't performing. But I suspect what's happened is people have moved money into gold pre the election on the basis of uncertainty about what would happen after the election. And so we saw the gold price and the stock markets hitting all-time highs leading up to the election. And then post the election in the US, we've seen some astronomical surges in the markets. So we've seen Bitcoin going to, I think this morning, over 90,000 US dollars for a coin. So that's record highs. We've seen stock markets surge post the election. And all of that, obviously the Bitcoin stuff is off the back of the belief that with the new government and Elon Musk's involvement in that government, that there'll be a lot of support for Bitcoin, and therefore people have bought the rumor, as they say. And then with the stock markets have reacted positively on the basis of some of the policies or commitments or statements that were made about what would happen under a Republican government. Whether that all transpires is yet to be seen, and is some time away from being seen. But the markets have reacted positively to the change in government, which is interesting because there are a huge number of policy decisions that are going to be detrimental to the US economy and global economies if they're enacted as described during the campaign. And so there's inflationary pressures, there's all types of the tariff policy and the impact that will have on global trade and US trade, all yet to be determined. And yet the stock market has responded, indicating that they're happy with the outcome, and therefore the stock market has surged. So that then brings us to this article about gold and that 2-month low. What did it say here? Yep, the 2-month low following the election, and it's the Trump trade effect. And what that's basically saying is that Now that we have a result in the election, and it's becoming clearer by the day that the Republicans will have total control. What that has led to is that, I guess, that risk on trade, where people were moving money into gold in case there was a negative impact on stock markets and other things, that has dissipated. And so people have effectively moved their money out of gold into the stock markets. And so that has seen the gold price, drop quite dramatically. And hitting a 2-month low, it's clearly, in my opinion, back to where the markets should be under the circumstances that we're seeing at the moment, in terms of, if the stock market is going to keep rising to new highs, we shouldn't also be seeing the gold price at highs. So that money is coming out of gold, it's going back into the stock market, and we're seeing some level of normality return to the gold price, because, as I said from the outset, gold is when a risk is on, and at the moment, it's the markets are suggesting that risk is off, and therefore money doesn't need to be deployed to gold for a safe haven, which is as it's often described. The other factor that this article talks about is the rise in the US dollar because of the election result. And that therefore makes gold more expensive for people around the globe outside of the US dollar market. And so it's becoming less attractive to people to hide their money, or not hide it, but certainly secure it via the gold market. And so that's leading to the theory that the gold price is weakening, and that the outlook for gold is definitely lower, and it puts a whole host of other factors in play. So this article moves on to talk about, well, what does that mean for rate cuts? And Fed Watch here are suggesting that there's still a chance of a rate cut in December. Interestingly, with all the election news, what was overlooked in the last week or so is that the US cut rates again, even post the election. So since the election and the recording of this video, the US had actually cut rates, but I defy you to find any news about that. But it was out there, and they're now saying there's still a 58% chance of another cut in December. But over the long term, markets are now expecting fewer rate cuts to come from the Fed Reserve in 2025. And so that's interesting, because, again, they say the last 3 times the Fed cut interest rates, gold rallied on average 100% from the beginning of the rate cut cycle to the all-time high. So that's an interesting analysis. We've already seen at least 2 rate cuts in the US. So we are in a rate cut cycle. So it'll be interesting to see where gold does eventually end up. But right now, with all of the policies thrown into the mix, the market is suggesting that there might be a slowdown on those rate cuts because of the inflationary impact, or expected inflationary impact of the new government policies. And given that the new government doesn't even start until January, late January, there's some time before any of that stuff starts to even be implemented. And so we've still got a good 2 months worth of existing market policies or government policies that the markets need to digest. But as we all know, the markets pre-price the news. And so in expectations of the new government, we've seen the stock market rise, we've seen the gold price fall, we've seen Bitcoin rise, even though any change to policies are not coming for 2 months. So what that means is, in 2 months' time, and we start to see what actual policies are implemented, and like I said, some of them are going to take some time, Others are going to be potentially done on day one or announced on day one. So the markets will again react when reality hits. So far, like I said before, it's all based on rumor as such, or announced policies. And now we need to wait to see what actual policies get implemented, because I would hate to say that politicians say one thing to get elected and do another thing when they're in power. That would be really cynical of me to say that. But as we all know, it's the reality of politics all around the world. And so 2 months to wait and see what happens. It will be very interesting to see, as these policies start get implemented, to see how the market reacts. But for now, as I said before, the gold price fallen to a 2-month low, off the back of the fact that the general financial markets have decided that we're no longer in a risk-on scenario, as they describe it. And so money is moving out of gold back into growth assets like the stock market, like Bitcoin, and the confidence that the economy will continue to grow under the new government has fueled all of that movement. So if you had been looking at gold as a safe haven, picking up some prices at these much lower levels is potentially beneficial. Like I do believe that we might see it drop a little bit further before it stabilizes, and then we'll see what happens in the new administration. But gold, as I said, and as I teach, is a strategy for when everything else is going pear-shaped. And it has been extremely unusual for gold to be hitting all-time highs at the same time as the stock market. So we are returning to a little bit more of a normalized scenario for the gold price. And that just means there's opportunity for you as a long-term investor to potentially get some of your cash invested into that safe haven for when it next rises. And as this article suggests, when we're in that rate cut environment, the gold price has risen on average 100% from the beginning to the end of the rate cycle. So seeing it drop to a 2-month low could be, in the coming weeks and months, a good time to at least get some of your available resources into the gold market as a safe haven for when we potentially see this rate cut cycle play out, and potentially we see this 100% uplift in the gold price. We might have already seen some of that, so you might not get all of it, but it's potentially an exciting time to have gold in your portfolio. And so I'd really encourage you to keep an eye on what happens in the gold market, in the gold price, so that you can get yourself placed and have a nice piece of protection, for when the markets have a negative period of time. It always happens. It will happen in 2025. We've seen it a couple of times in 2024. May still happen before the end of Christmas. Probably not. I think we'll probably see a little bit more of the all-time high stuff happening. But when the stock market does have a negative period of time, and if we do have a sustained rate cut period in the US, we're going to see some growth in the gold price. So hopefully that's helpful. Thankfully, this week we're not talking about inflation and interest rates, although there is a little dabble of it there. But the key theme here is gold, and how to incorporate gold into your strategy to take advantage of what's happening in the markets right now. So that's Woody's Weekly Wisdom, episode 74. Do us a favor and hit that subscribe button and the little bell if you're watching on YouTube. And if you're watching on Facebook or LinkedIn, leave us a like, a comment, and even share it to people in your network so that more people can understand the value of having gold in their wealth creation journey. Have a great week. We'll see you again next week. Cheers.